I'm Diego Sanchez, COO of HW Media, and this is 10 Minute Talks. My guest today is Michael Isaacs, CEO at Go Mortgage. Michael, welcome to 10 Minute Talks.
Thanks, Diego. Nice to be here.
It's really great to have you. Before we dive in, could you give a 30-second intro of yourself and Go Mortgage?
Sure. So my name is Michael Isaacs, the CEO of Go Mortgage. I've been in the mortgage business for 27 years. Started a company in 1997 called RFC, Residential Finance Corp. Grew it for 17 years and sold it in 2013. I then took a couple years off, ran a big division for a company called Fairway Independent Mortgage, and then purchased Go Mortgage, a company that had been in business since 1995 in November 5th of 2021.
So why did you make that move from being a senior executive at Fairway, pretty recognizable brand, back to sort of being an entrepreneur and buying a mortgage business yourself?
Sure. Well, it was always my plans to buy a mortgage company and to get back in the driver's seat. But one of the real impetus for doing this was at the end of, or really at the beginning into the middle of 2021, I realized that the industry was going to change, and it was going to change drastically. Maybe not quite as much as it did. And I wanted to be able to be in control of things like marketing, technology, pricing. And I didn't feel like I'd have the same control working for another company. So that was really the impetus for wanting to buy a company. And so in early 2021, I started looking for companies to buy. I talked to about 15 different companies and fell in love with this company called Go Mortgage.
Well, let's dive a little deeper into Go Mortgage. What channels does the company operate in, and what's your product focus?
Yeah, so we have three distinct channels. We have what I call a distributed retail channel, which is today about 40 offices or branches around the country, concentrated today in about 15 different states. So we're licensed in 44 states, but we have brick and mortar offices in about 15. And those are local loan officers, typically a branch manager, and anywhere between 2 and 10 loan officers, sometimes a processor, an underwriter, or closer inside of the office, maybe a marketing administrative person. And they're entrenched in local communities. They build and form relationships with local real estate agents and other potential referral partners who refer business, right, based on providing value based on that relationship. And then we have a consumer direct group that is today intentionally small, just given the current environment. We're doing mostly purchase through that channel, and it's a very efficient channel, right? Today, it's about 15 loan officers that do business in 44 states. We buy leads from sites like Credit Karma, NerdWallet, Bankrate, and people from all over the country reach out because we have a very competitive rate, low fees. And so they choose us. We take an application, we pre-approve them. And in that channel, customers tend to either already be in contract or go into contract fairly quickly. And then our last channel is construction, which we offer both retail and wholesale. So we're one of the largest sellers of single close construction loans to Fannie Mae. We offer that product in a conventional product, FHA, VA, USDA. So today, where there's very limited inventory, for somebody that wants to buy a lot and build a house and finance it using very little money down, 5% conventional, 3.5% FHA, and 0 VA and USDA, you can do that with our product. And that's become incredibly popular just given the current environment.
Yeah, that's interesting. The construction product and the footprint of that, was that historically something that was big at Go Mortgage, or is that a product that you've been really pushing since you took over?
So Go Mortgage really built the product, the division, the channel about 6 years ago. Okay. So when we were looking for a company to buy, I really wasn't looking for construction. We were looking for a company that already had their Fannie, Freddie, Ginnie, that had some servicing, a good product offering, a good leadership team, other things, a good footprint. Go was in 35 states when we bought them. Today we're in 44. was not looking for construction, but I've fallen in love with construction. Today, where there's just very limited inventory, consumers are really struggling to find a home. They can go out and they can buy a piece of land, and with 5% down on a conventional loan, they can build the home of their dreams and get everything they want. So it's been a great product, and the demand for it's been incredible, especially in our broker channel. We have brokers from all over the country banging down our door to get this product because most mortgage companies don't offer it. And it's been great.
That's really cool. Go Mortgage jumped onto my radar when you recruited Stephen Reich and his 21 branches from Finance of America's forward mortgage division, which was in the process of shutting down. How did you negotiate that move?
So long before I even bought Go, we started talking to some people at Finance of America about potentially coming over to Go Mortgage before we had closed on our deal. We really loved the culture at Finance of America. This is a group that was really two companies that came together about 10 years ago to create Finance of America. And a lot of these branch managers, loan officers, leadership team, they had been together for almost 20 years. And we just really believed in the same vision of what a mortgage company in the future should look like. And so just culturally, we thought it was a good fit. At the time, when we bought the company, it wasn't really good timing. Finance of America was still a viable company. And we were very new, right? We had just bought this company. We're just putting it together, building systems, processes, marketing, technology. And so, it wouldn't have been the right time. Finance of America had a very mature platform. And so as we continued to build Go, and as Finance of America started to have, some challenges, it just, eventually it was the perfect timing. And Steve Reich, me, my partner, Jordan Hansel, along with Jay Madursky and some other people from their leadership group, got together and talked about what this could look like, what we were building, what our vision was, what their vision was for the mortgage company of the future. And it just all came together, and they decided to come to Go, and it's been a really good partnership.
So you're about almost 2 years into your leadership of Go Mortgage. Are you continuing to look at inorganic growth opportunities, or have you pivoted to organic, or are you looking at both?
We're really looking at both. So, given the current market, opportunities come to us all the time, big and small, to acquire a small group, and that's been interesting, and we'll continue to look at those deals. But really, it's the organic growth. It's the small groups of originators, a branch manager, 3 loan officers, 5 loan officers entrenched in their local community that come with a book of business that already have the relationships that for one reason or another are struggling where they are. And they realize that we just have a better platform, whether it's better technology, better marketing, better operations, better pricing. It's an easy decision to leave where you are and come here. And those deals are easy to do. And a group could be up and running in days and operating at a level above where they were at their current company or at their previous company.
Why are you leaning in right now when so many other lenders are status quo or declining in size intentionally, or even going out of business?
Yeah, I think right now is a very opportune time for mortgage companies that are properly capitalized to take advantage of the current market. I've never seen it like this. I've been doing this for 27 years. There isn't a loan officer in the country that's happy where they are, and everybody's sort of looking over their shoulder, and volumes are down. Everybody is struggling, and companies are making changes. And so whether they've taken away a lot of your support, whether it's marketing or maybe your assistant or other resources, every mortgage company is trying to get as efficient as they can. They're trying to eliminate expense reduce their budget. And so, when you're taking away resources that you're used to, it's unsettling, and it's causing loan officers, branch managers, other mortgage executives, employees to look for other opportunities. And so, from a recruiting standpoint, it's a very opportune time to be doing what we're doing. And if you have a platform that's efficient, that has all of the resources that a branch manager or the loan officers would want, if you have a good brand, if you can support those groups with marketing and technology and operational support, it's a very good time to be recruiting.
Well, this is a really good and productive 10-minute conversation, Michael. Thank you so much for joining me.
You're welcome. Diego, thanks, and I appreciate the time.